First of all, let's see where US 10-year bond yield, where this thing is flying. If you see just Friday closing, then you can see closing above lower and upper bound of Fed current interest rate. So higher than upper bound of Fed current interest rate, that means something more than Fed rate pause. Right now we are in FOMC blackout period and your Monday market open will be historic. Dollar is reserve currency. Entire world will be watching the hint for next fiscal policy, new administration. Whole machinery will change and sure they will say something. So there will be direct attack on US fiscal policy and investor will make their decision. So things change after recent inflation indicator lower than expected, but still story does not change. We have rising inflation, we have rising inflation expectation, we have rising yield. So everything is rising and they all say Fed must pause interest rate. If you relate this higher yield, this high with gold price, then each turn there was major bottom in gold. But recently since their first cut, or you can say since beginning of their rate cut cycle, yield have no effect on gold like last 3 years. But still this thing will affect US economy and they will affect SP 500. So more time yield stay on this level, more problem for SP 500, US economy, recession risk. And if these yield fall from this level, and which is happening after recent CPI number, because it was lower than expected, and your new Treasury Secretary predict economic depression in China, and this fundamental reason to verify that forecast, because Chinese yield are falling very fast in vertical line. Clearly they are pricing for huge deflation, same to same like Japan. So lower than expected CPI number and big deflation in number 2 economy. Something changed last week, especially prediction from new Treasury Secretary. This is 10-year bond yield. I think in December during Diwali festival this thing will be trading near 3.6%. Not immediately but starting March this year. And now if you see dollar index weekly time frame, since the beginning of their rate cut, dollar is vertical and it has retraced more than 61%. Technically it is highly overbought, sentiment are very high and yield are trading at wrong place. There will be more cut in second half of this year, but market is pricing more than pause. So high chance either dollar starts sideways correction from this level or counter trend correction back maybe 106 level. Same thing happening in slow motion once again. Some central bank are selling their gold in international market to buy dollar to save their currency. If big player start collapsing, then there can be problem, but you have same problem again. Currency crisis is here. Now if you see Euro USD weekly time frame, then price goes down, retrace 61%, goes down, and same thing last wave is doing, going down 61% retracement complete. So this high and low, each wave 61% retracement, and we have big sentiment change and big technical shift. So this entire area, if you focus only on 61% retracement, this level, this is a big static support level. Trade with bullish bias on this area, and first target will be 0.60. that will be your counter trend correction. By the time this thing happen, we will have Fed FOMC decision, they are cutting or pause. We will have Trump second term, and what he do in first week. But this is support level 0.2 and this is resistance level 0.60. Same condition on USD JPY weekly time frame. So Fed will be cutting interest rate. Market is pricing more than rate pause right now. But after March this year, everyone will be talking about rate cut. Market and Fed both. And your BOJ, they will be doing rate hike. So by default, interest rate difference between two central banks will decrease and this pair will go back below 152. This can be your ending diagonal chart pattern, full retracement like double top, then going back below 152 level. USDCAD, before breakout, before election, I gave clear warning. There will be range breakout. Be ready. Technically, everything is clear. So this big sideways range, 3-year-old breakout vertical line. And if you see monthly time frame, USDCAD, it is testing big static horizontal resistance level. And it is multi-year sideways range. So if this level retest, technically that will be selling opportunity. This is monthly time frame, and on H1 you can easily trade with bearish bias. And first support obviously will be 140 area. Same condition on USDCHF weekly time frame. It is a big static resistance level, price testing once again, weekly time frame resistance zone. You can easily trade with bearish bias on H1 time frame. Support is not clear, so 50 or maybe 61% retracement from this area, that will be the target. So Bitcoin 92k big static horizontal support level, because if candlestick close below this level, sentiment will change instantly. Silver daily time frame, big dynamic support level, breakout now ready to retest. Price almost there because it is dynamic, and static resistance that is also testing. So this area near $31, big level selling area, and target will be new lower low towards $28. You can see US oil almost vertical line, suddenly it is flying. So now if you say everything, inflation expectation and oil, these were last thing and both are flying, and this is a big red alert for Fed. And we have to watch carefully next FOMC meeting if Fed panic on rising oil price and rising inflation expectation. So price trying breakout this trend line last week, big failure. This is big dynamic resistance and support only $65. SP 500 monthly chart, this low, recent big Fed put and Trump is back. AVC 100% projection 6108. Either something happen, clarity come from fundamental side and market start turning, otherwise based on Elliott wave theory, next target is 7108. Either price make big sideways correction on 6108 level, then break out to 7108, 38% projection, or this is beginning of first quarter, everything is ready and Trump speech last hint, and you have to trade based on this level, either 6108 or long sideways range. You can see GDX daily time frame, trend line breakout, Now retest is happening, and this last wave 61% retracement done. So you have your retracement level, you have trend line retest. This is sale zone near 36 level, and target is new lower low. And you can see gold retrace back to 2700 level, and it looks like ready to break out, but GDS is still trading low. And you can imagine gold can break out that level and go to $3,000, but still GDX will be trading below 44. So above this trend line and this retracement level, this is sale zone. Target new lower low.